Okay, we are live. Let me double check that the video is running. Yeah, it seems to be running. Testing, testing. Okay, we are live. Let me double check. Great. Let's do it. Okay, so this is a Q2 quarterly review. For this quarter, it's really bad. I'm down 27%, 27.2%. My largest position is coffee, and it accounts for 40% and more of my portfolio, and is responsible for most of my gains in Q1. At the high, it was the portfolio was up 48.5%, but Q1 closed with plus 34%, and Q2 is closing has closed with a minus 27.2%. So I've effectively lost all gains made this year. So other than coffee, which accounts for the most of the gains and retracement in the first half of the year, there were a couple of percentage losses. Uh, Bitcoin short, gold short, they are losing like a couple of percentage each. I'm still holding them, and I think their bear cases are still intact. Um, there was also a 5% loss in the experimental short-term trading for the Singapore and the US market, to see whether while working full-time, that is the right direction to go. Um, Let me see whether the screen is being shared. Yeah, the screen is being shared. Then what else? Let me see. Um, yeah, I think that's largely the case. But I did avert the terrorist sell off, a crash, by selling most of my stocks and indices position in early March. But that just didn't let the portfolio go down. But it's just that it's going down because of the correction in coffee, and a couple of percentage losses in a couple of positions, as well as the experimental 5% lost in trading. So let's have a look. So maybe we look at some of the positions that have closed first. Soybean oil. So soybean oil is moving very nicely. Uh, Very beautiful shape. I bought here, but I sold earlier part of this year. I bought here because of for cash flow reasons. Um, I want to maximize my cash in the bank, so I put those cash in the bank into this position. Then I need to withdraw money to meet cash flow, so I exited somewhere here. It's moving very nicely. The setup is very nice actually. It was a force breakdown here. Over here, there's a force breakdown. Then there's a retrace to test the second chance to buy, right? With the upside here, target here. So it's quite clear, clean, long position. Um, and it's moving very nicely with a potential upside somewhere here for 50% gain. But have exited for cash flow reasons. And initially, that was because I want to optimize savings anyway. All right. Then crude oil. Okay, so this will be updated. Yeah, there was some outdated rendering earlier. So crude oil, I bought here. So it went up and down, up and down, up and down, and I bought added here. Then I exited here because it was um, much weaker than other commodities that I was holding. So I wasn't sure whether it's going to spike up a lot upwards or down, although it seems like being long isn't wrong, but I just don't have the conviction that I have a high probability that it's going to go up. So I exited just to uh, play safe. So I exited here. So if you look at somewhere here, you can see a lot of selling pressure here. Then there was the news of the war in the Middle East, and it has a spike up, and then it lost back all again. So I won't be surprised that it started to drop way lower. It's just a very bad bearish movement I feel right now. Right? Was there a Monday close above? No, the close the month didn't even close anywhere above. It was just it feels like short squeeze. But anyway, I'm already out of crude oil. Tested a lot of my patience, but it just didn't work out for this trade. Just basically exit near flat. Okay. For the other one, of course, a substantial loss of I think about 10%. Not substantial, but not negligible. Okay, go long. Next, let's have a look at a go long. So for long here, maybe I look at another one. There was an older chart. Okay, so for gold, I long here at around 2000 in 2023 December. I exited somewhere here. Somewhere here. Okay, the reason was it has reached I think what would be considered fair target, and over here it seems to have a lack of ability to follow through in the consolidation breakout. So when it went down, I exited somewhere here. Then okay, I'll talk about the short position later. I started shorting here all the way up with a 3180 average short price. But let's talk about that later. That was my goal long. Make decent gains, of course, in around 2000 and exit around 2009. I'm also exited. Maybe let's talk about this few first. Deutsche Bank. I bought the 3 years ago before I joined the bank. I bought here, I added here, I exited somewhere here. So it was a clear reversal play for me, a turnaround story. And this year, you can see that the price is narrowing up to a fair value range, the gray lines. And then it started to break out and be bounded by the black lines. And I exited when it has a failed breakout of the black line. It was very volatile here, suggesting that the market is topping. So when there was a failed breakout here, I exited here, around 23. Then there was a movement up, then a big drop due to the tariff news. But I definitely don't have the conviction to place a trade here for the upside here. I totally don't have any conviction of that. It's like as good as tossing a coin, right? But whereas when I bought here, I have like 90% confidence that it's gonna make money. It's gonna double, which it did, and more than double. But for here, I don't have conviction at all. Like it's gonna rally upwards or go higher or go lower. I don't have any sense of high conviction where it's gonna hit. So I didn't bought back. I didn't buy back. FTSE. So FTSE, I long here, and I exited here. Why? Because this orange line is a long-term line that was stretches over many years, and when the line was worn over sometime earlier this year, and it was lost easily as if it wasn't there. I felt like something was wrong with the market. True enough, when I exited, it did a small bounce and have quite a big crash. Look, it's like erasing all the gains for the last couple of years from the tariff news. Anyone who has a stop loss would have been stop out. So I exited here. I didn't buy back at the low because I bought back some other stocks instead. I bought Glencore and some other. Yeah, I think I swapped the FOC to Glencore, so I didn't buy back at the low. The capital was committed to some other position already. Otherwise, it's a reasonable long here because there was a this gray line and the price retraced to hit the consolidation zone there. It's a fair long. I didn't long here, but I wrote a post that at this low that for Nasdaq is probably the bottom. So usually the point to go long. So FTSE reclaimed the orange line, did a bounce, a weak one, hit back and bounce again. So it's a little mix whether it would go up higher further or downside. But based on my interpretation of Nasdaq and let's say STI, I think they are going to hit higher. So FTSE might move higher as well, aligned with the global economical direction. Right, STI. So STI I bought here and I exited here before the crash. So why I did that is because if I look at this, the blue color lines are the long-term trend lines, and when price shot over the long-term trend line and tested it, it did a very, very weak bounce. So I felt like something was wrong. It should be aggressive and strong if it's a real breakout, but it didn't. So I exited here. It gap down and then flush out, some of the shorts again, and then crash crazily, erasing almost all the gains for the last 2 years. But by then I was out in the SDI already. And over here I was thinking here's probably a good time to long. But I don't have a strong conviction because it just looks very scary. Yeah. I didn't long it. But I bought some other stocks which are undervalued for the Singapore index. Not from the Singapore market, so I make money from those longs instead of the index, which I don't have a good conviction. So I also exited Singtel. So I bought the Singtel here. I exited there. So I bought here. Why I exited there is because it's at some fair resistance point, and instead of going up higher, there was a selling pressure. So I want to play safe and exited. Although I estimate that you'll hit $4. Estimated that you'll hit $4 somewhere here, but I got out because I felt like there's some weakness. And true enough, there was a tariff crash, but it's just that Singtel was affected. Right. Also exited Singapore Stock Exchange. I bought here a couple of years back. Just confirm that the video is playing properly. Yeah, that's right. So I bought here a couple of years back. I exited here because of this dominant shape, and it seems to be pressing down towards a breakdown. I exited here, so I averted the tariff crash. I didn't buy back again. I committed the capital to some of the Singapore stocks and make money from those, but don't have a conviction that this will be a high conviction trade to try to long here or here. Typically, you have a sharp dive, you probably want to see another sell off before you buy. But in this case, it was quite exceptional. It's quite rare. You have a sharp sell off and you go straight up. Yeah. Probably is on the right track to hit the upper trend line, but I'm already long in some other stocks, basket of other Singapore stocks, so I won't try to swap out to buy enter this again. The other stocks will have a equivalent upside potential as well. Whereas one, you might never know, it might just come down and hit here again. Some of the other Singapore stocks that I bought would be example, I long it here, I exited here. It looks small here, but it's like almost 20%, right? 10 plus percent, 20%, right? Um, some others would be this one, Joe Energy. I long here around 31 cents. I exited here about 36 cents. So again, 10 plus 12%. Okay. So now it came back to test here. Maybe it's a good point to long, but shape is not very nice though. Like, top glove I exited at break even because it just didn't move. Yeah, I bought here, exited here. I felt like something was wrong. It didn't move. Luckily, I did. It went down for much further. No, there was a failed breakdown, so I long. But after long for a while, it just didn't take off, so I exited. Luckily, otherwise I would lose 20%. Okay, let's talk about stocks that I'm holding now. Position I'm holding now. It's quite a number of them because I diversified a lot for my wife. Portfolio, she has a 10, almost 15 positions. For whereas mine has about 9. So coffee. So I long here. There's a spike up here, responsible for most of my gains this year. Then there was a correction. It's going even lower than the start of the year. So you can imagine how painful it is for 3x ETC. But I don't think the market has topped yet, so I'm still holding. And if you look at the long-term position over 50 years, it's actually testing the high of here, 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 here. So I won't be surprised that that is really not the top and it continue to head up. So I didn't want to time sell high, buy lower because in practice it's really hard to do it correctly. You got to do it correctly twice. You know, sell at high price, got to buy back at lower price. So I'm continuing to hold, right? Of course, there are seasoned traders and commentators who are saying that the coffee has topped. The professionals who are shorting it, but I'm still on the long side. You know, the target is like around 200 and lower, but I'm still holding it because I don't think it has topped yet, but it's more of a correction. Sugar. Still holding the sugar long from here. I bought here, added here, added here. Still holding it. I don't think top has been formed yet. There's a lot of acceptance in the price here. It's more like a retracement move for this bull market since the pandemic. So I'm still holding. Gold short. So I was saying I make a short position in gold. I started to build a short position from here in February all the way to April. So my average price somewhere here. Here. Yeah, I'm somewhere here. So the story is that go over. You can imagine the orange lines as a fair value, the center line fair value for gold. You know, you overshot, you go down, go below, then go up. You overshot, you go down again. So right now, gold has overshot, has come down, tested here, and come down again, and now it's testing a middle line. So I think it's moving fine for a short bear position. So I'm still holding it. Very nice setup actually. You know, you overshot, over optimism, come back to test the fair value line, come back to test the upper range of the fair value, and now coming to test the went below and testing the fair value line again. Fair value line in the sense that it's the line that guides the price movement for the bull market since a couple of years ago, right? You can see price oscillating around that middle orange line. So I'm still holding the short. Copper, I'm holding a long. This is where I bought. I added here. Very nice development for upside target of somewhere here, close to $8. Right, still holding. Price being accepted here above the blue line, and it seems it's being accepted here again above the blue line. I think it has a decent chance of a real valid breakout to exist in the upper range here. So it's still holding. Then call. So I bought here prematurely and it dropped and lost 1/3 of its value suddenly with the tariffs news. And then it bounced back up again. So I'm looking to exit on strength because I was wrong when I first bought it. So if there's a second chance to get out, it break even or like a profit, I should treasure that. Otherwise, it might be a a bounce amongst a broader, longer term bear market. I don't think that's the case. Um, I think commodities in general should be at the low. So this is a commodity trading house. I don't think so, but I still want to play conservatively. That if it hit the break even and slightly higher, I want to get out just in case I'm wrong on this trade. Yeah, but it has since the low it has moved very bullishly, very nicely. V shape, sort of like a V shape recovery. Okay, Ocado. So this is a bargain hunting trade. Setup is quite straightforward. It's like there's a channel, 3 lines breakdown, but after breaking down, the fall isn't as steep as it should. So it means that the market is actually trying to accumulate long in it rather than shorting and cutting losses. So I bought here and bought more here. Moving nicely. Target, I think minimally we want to look at somewhere here, the center of these 2 lines. So it will be at least double, I think. Target. Bitcoin short. I would have covered this in the February one. So let's look at the updated plot. So the setup initially for making the short is this. Failed breakout, so I shorted. Then it went back. I believe this is a flushing move, not a reversal towards the bull case. And we look at the so the circles are where I shorted. I shorted here, shorted here, shorted here, short more here, short more here. Right? So just holding a short. It feels like moving bearishly still in my view. There's a lot of strong selling. We'll see where it goes. But there's another broader view now. That I discovered I prepared these plots earlier a few months ago. Then later on when I revisited it, it looks like the previous plot is a linear plot. This is a log plot. So looking at the log plot, we are having some form of a head and shoulders this way. Something like that. Dun, dun, dun. So the dominant view now is actually a log plot where it's aiming for target somewhere here, like $30,000-$40,000 outside. Okay. So with this dominant shape, it looks like price is moving false breakout, pump, test, sell off, bounce again. So price is still moving bearishly in my view for potential downside towards here. So we'll see. Right, that's Bitcoin short, and they are like one of my largest position. The Bitcoin and gold, they account for 1/4 of my portfolio now. Nvidia. Long-term shape this way. Price has to reclaim the center line, so he's trying to want to see a breakout of the top orange line to trade somewhere here. So his top orange line, I bought here, further flushing, but drop too much to try to buy more. So I didn't buy more here. Set through the position while it rallied. Reclaim the center orange line, reclaim the blue line. Now the next upside resistance will be the top orange line with blue line as a support. Okay, still holding. Moderna. Yeah, so I bought Moderna somewhere here, and it actually went profitable substantially here, but they didn't sell because I didn't appreciate the second chance to sell. And it dropped way undervalued. So I bought more here, bought more here. So it's like now somewhere here. At worst is go to zero. At it can easily go to like $90 or $100. So I'm still holding. You look at the money plot. Found some spot here, getting ready for a bounce. Okay. So the shorting line fix. Long-term shape is this, expanding, triangle shape, bearish shape generally. Then breakout of the top blue line. So I'm betting that the breakout is a false breakout. It will fail. So I shorted somewhere here. And other than the top blue line, there's also this orange line, which also has a short midterm bearish movement. Price keep hitting back the lows here, hitting back the lows. Even here, there's one So I shorted here, shorted more here. I will want to short more if it starts to trade somewhere here, or it did a false breakout of the black line and come down again. I'll short here or here, depending on how bullish it can go. But I'll add to the last of my short. Basically now, out of the 100% capital allocated to this position, 40% is in the 1x short, 40% is in the 3x short. I'm looking to add with another 3x short for the remaining 20%. Renew Core is a speculative bet where you can have a 50x upside. But now reviewing, probably I want to be conservative and aim for 3x, of the capital. Yeah, somewhere here. So I bought here. When the market was very weak, it held through. Now it's further retracing. It's a small part of my portfolio, about 2%, 1 or 2%. So upside maybe 3 times here. So now I'll walk through some of the basket of Singapore shares I bought for my wife. So Yang Zhejiang I bought here. I felt like there wasn't a failed breakout here, and this is slightly a failed breakdown before a rally towards here again. So I bought here. Now it's up here. Capital. So it's a very nice rejection, and then trading above the center line. So I thought it's a fairly clear long setup. So I long here. I bought more here. They continue to head up, keep breaking new consolidation high. Now it's somewhere here. It's probably soon will test the old historical high before during the subprime. So Costco, I bought here. Now it's retracing a little bit. Still holding. Mermaid, I bought here. Spike up, testing here. Maybe somewhere here I'll exit. Venture Corporation, I bought here. Then it's claiming the blue line here. Okay. Maybe I should cover a little bit. Costco. This is a Costco shape. I felt like it seems to have difficulty going down. For Mermaid, you have this shape. So it's a potential inverse head and shoulder. But I might be conservative and exit at the orange line, depending on how strong the broad market is. Okay. Wilma is a recent addition. There was a bad news one of the day, but the bad news didn't get down, but just mild selling. I felt like the false breakout here is likely to cause selling, but even with the false breakout and the bad news, the gap down and the retracement is the selling isn't that bad. So I felt like the real direction should be up. So I long here. So now I'm still holding. Look, after breaking down this line, it's still holding on quite well. And it's breaking down below the orange bottom orange line at the very end of the shape. So chances are it's gonna be a false breakdown before going up. Because if there's a profit to be made, traders will have already shorted and sold earlier, not at the last minute. Yeah, that's all. That's all for the stock in different asset classes sale that exits that I made in Q2, and the various positions I have now. For mine is just about 8 to 9. My wife wants is about 14, 15 positions to be more broadly diversified. And for the quarter two, I'm down 27.2%. I don't think there's any uh, major mistakes made. It's just a natural rhythm of having a long portfolio. There's a long term. Yeah, I think maybe Warren Buffett's long term portfolio also dropped by Berkshire Hathaway. Also dropped like 20 30%. It's common during a drawdown. Not comparing myself to him, but just saying if you hold a long term portfolio, uh, and you want to see through corrections, it's probably inevitable. But now that I'm working on it full time, I might be able to try to avert corrections in the future, like the one with coffee. Another thing is if possible, maybe we can look for solutions. Like here, there's a breakout here, and then there's breakdown. So maybe at this breakdown on a bounce, I should take profit first. That will let me avert the correction, right? So it'll be here. So on the breakdown, bounce, take profit here. Take profit here. But I didn't want to try to time because this is like a really long term trade. We were set up over like 50 years. If I try to time and I'm wrong, I try to sell here and then it shoot up here, I will have lost the position or end up having to pay much higher to get back the position. So it's a bit tricky, right? Like the monthly shape is bad, right? But the weekly and daily is fine. Weekly and daily is fine. Yeah. So now it's somewhere here. So we'll see how it goes. I don't think it has topped yet, but maybe I could have handled this better. But I'm still not that sure because to exit here, what if I'm wrong? To exit. This is obviously a clear false breakout and breakdown, but when you do that on the long term setup near support, it's a bit tricky to actually try to exit because you might be wrong to exit. Okay, that's it for the quarter.